Hello everyone, welcome to my YouTube channel. In this particular video, we'll solve one more problem related to financing decision, section C problem. The operating profit, or it is also known as EBIT of AB Limited. Okay, AB Limited is 6 lakh rupees. 6 lakh rupees is the EBIT. Its capital structure consists of the following. So the capital structure is as follows. So they have 10% debentures of 20 lakh rupees, 12% preference shares of rupees 4 lakh, equity shares of rupees 100 each, which is total capital is 16 lakh. The company's tax rate is 40%. You are required to calculate the following. First one is the EPS. Second one, the percentage change in EPS associated with 30% increase and 30% decrease in EBIT. So this is the three cases they have given. So case number one is normal case. Case 2 is if EBIT increases by 30% and if EBIT decreases by 30%. So this is the three cases we have to solve. So first one is EBIT or operating profit. So it is that one in the question. The operating profit of AB Limited is 6 lakh rupees. So the EBIT will be 6 lakh less interest we have to pay. So we have debentures. 20 lakh debentures are there. So 10% is the interest we have to pay. So it will be 2 lakh rupees. 6 lakh minus 2 lakh is 4 lakh rupees. And that 4 lakh is earnings before tax. So for that we have to charge 40% tax rate. So 40% on 4 lakh will be 1,60,000. So 4 lakh minus 1,60,000 will be 2,40,000. 2,40,000 is the earnings after tax. For that we have to give dividend for preference shareholders. So there are 4 lakh preference shares and dividend rate is 12%. So 4 lakh into 12% will be 48,000. 2,40,000 minus 48,000 will be 1,92,000. That is the equity or earnings available for equity shareholders. So total the equity share capital is 16 lakh and each share value is 100 rupees. So 16 lakh divided by 100 if you do, we will get the number of equity shares, that is 16,000. Now we have to calculate earning per share. So 1,92,000 should be divided by 16,000. You will get 12 rupees. 12 rupees is the earning per share. Next case B, if EBIT increases by 30%. So 6 lakh was the actual EBIT. So I will increase plus 30%. The EBIT becomes 7,80,000. From that you have to reduce interest. We have found out that is 2 lakh. The difference will be 5,80,000. That is earnings before tax. On this we have to charge 40%, that is tax rate. 5,80,000 into 40% will be 2,32,000. The remaining will be 3,48,000. That is earnings after tax. From that we have to reduce the preference dividend. Preference dividend is 48,000. If we reduce that, the remaining balance will be 3 lakh rupees, and that is the earnings available for equity shareholders. The number of equity shares is 16,000. 3 lakh divided by 16,000 will be 18.75. 18.75. This is case 2. Case 3 is if EBIT decreases by 30%. So actual EBIT was 6 lakh rupees. So now we are subtracting that 6 lakh rupees minus 30%. So the EBIT will be 4 lakh 20,000. The interest is 2 lakh rupees. The earnings before tax, when you subtract both, the earning before tax will be 2 lakh 20,000. Now tax you have to charge at 40%. So 2 lakh 20,000 into 40% will be 88,000. After you reduce the tax, you will get EAT, earnings after tax, that is 1,32,000. From that you have to subtract the preference dividend, it is 48,000. The remaining balance will be 84,000 and it is the earnings available for equity shareholders. So divide by the number of shareholders. So total we have 16,000 shares. So when you divide 84,000 by 16,000, you will get EPS, that is 5.25. In question, they have asked us to find out the financial leverage. Now let us calculate the financial leverage for all the cases. The formula to find out the financial leverage is EBIT by EBT. So first let us solve for case A. So EBIT is 6 lakh and EBT is 4 lakh. So 6 lakh divided by 4 lakh, if you do, you will get the financial leverage, and financial leverage is 1.5 times. Next is case B. So EBIT will be 7,80,000 and EBT will be 5,80,000. 7,80,000 minus 5,80,000 will be 1.34 financial leverage. Third case you have to solve. So the third case, or case C, let us check. The EBIT is 4,20,000 and EBT is 2,20,000. Both if you divide, you will get 1.91, that is financial leverage. Next, they have asked us to calculate the percentage change in EPS. So the percentage change in EPS is difference in EPS divided by base plan in the EPS. Difference in EPS divided by base plan in the EPS. First, let us calculate the percentage change when EBIT is increased by 30%. So 18.75 minus 12 you have to do. 18.75 minus 12 divided by base year, plan A or case A, it was 12, divided by 12 into 100. So the difference will be 6.75 divided by 12 into 100. If you do, you will get 56.25 percentage. That is the changes in EBIT, percentage change in EBIT. Similarly, when you do for the EBIT, when it is decreased by 30%, when it is decreased by 30%, you have to consider these two EPS, 12 and 5.25. So 5.25 minus 12, if you do, divided by 12, because 12 is the base plan. 12 is the base plan. So minus 6.75 you will get. If you divide it by 12 and multiply it by 100, you will get the percentage change in EBIT, that is minus 56.25 percentage. So this is the changes in EPS, sorry. Hope you have understood how to solve this problem very well. If you have any doubts regarding the financial decision problems, please put all your doubts and queries in the comment box so that I'll respond to your doubts and queries as soon as possible. Thank you for watching the video. I'll come back with some more concepts in my next video.